Let's see. Accounting standard 14, accounting for amalgamations. So generally amalgamation of companies. What is amalgamation of companies? So generally amalgamation, there are two types of amalgamation. One is in the nature of merger, another is nature of purchases. If two companies become one company, or one company takes over another company, they are all amalgamation only. For example, Vodafone Idea, they combine together to form B formation. It's called merger. Suppose A company takes over B company, is acquisition. So both anyway amalgamation only. A and B form AB Limited, or A takes over B, both are part of amalgamation. So two companies become same. In case of merger, so two companies having a same sort of interest, same kind of customer usage. So they can share their capital, liability, assets, customer, everything they will combine together. Example, Vodafone India, B. So in the nature of merger. In case of what is AS 14 says about amalgamation accounting. So 21 paper and as well as 13 paper also 5 marks theory. What are the conditions to be fulfilled in AS 14? In case of amalgamation, nature of merger, what are the conditions to be fulfilled? Similarly, A is amalgamating with B Limited. So the undecided what method of accounting to be followed. You can advise the management of B Limited on the method of accounting can be adapted as per AS 14. Okay, so the question is, what is merger? Nature of merger. Amalgamation, there are two types. Nature of merger, amalgamation can be done, or nature of purchase. That's it. What kind of accounting the B Limited can follow? That's it. Let's see. Amalgamation may be either an amalgamation in the nature of merger or in the nature of purchase. There are two types of amalgamation. The nature of mergers. Two companies become one company, or one company takes over the other company. Nature of purchase. So for selection of method of accounting for amalgamation, either so method of accounting there are two types, either pooling of interest or purchase method. Types of merger, two. Nature of purchase, merger. Method of accounting, two. Pooling of interest method and purchase method. So both the interest, both the assets and liability has to be pulled together, common pull. So purchase method. There are two types of method of accounting in amalgamation, pooling of interest and purchase method. It is to be judged after considering the intention of both the companies. If genuine pooling of all assets and liabilities, shareholders' interest is intended. The separate business of both the companies are continued. And the amalgamation studies all the conditions to be followed in case of merger. In case of merger, both capital has to be merged, both liability has to be merged, both asset has to be merged. So pooling of interest method is adapted. That's it. Okay. After amalgamation also, both the companies are continued. Separate business of both the companies are continued. The amalgamation scheme satisfies all the conditions necessary for merger. Then the pooling of interest method has to be adapted. After merger also, after amalgamation also, separate business of both the companies are continued. Anyway, the entity will continue forever. Continue forever. So pooling of interest method. For example, Walmart take over Flipkart. Okay, in this case, still Flipkart is operating in this name of Flipkart only. Still Walmart also operating in the name of Walmart only. Anyway, Walmart take over Flipkart. So pooling of interest method. Separate business of both the companies are continued. Flipkart will be operating in the name of Flipkart only. Walmart in the name of Walmart only. So pooling of interest method only the Walmart can apply. They apply. So B Limited or A Limited wants to acquire the other company. Other company they want to acquire. Then automatically purchase method needs to be adapted. A Limited, B Limited, or wants to acquire the other company. Then purchase method needs to be adapted. Shareholders of acquiring company don't continue to have proportion share in the equity of combined company. Sometimes combine the new company formed, the old shareholders will be getting the same number of shares or sometimes lesser or more, but not proportionally. Proportional they'll be getting. Okay, they don't continue to have proportion share in the equity. You are having 3 shares, you won't get the same kind of 3 shares. You may be getting 4 shares or 2 shares. Number of shares in new company will be given to the old shareholders will be higher or lower, but not proportional. Okay, so they don't continue to have a proportion share of the equity combined entity. Okay, right. So the object of purchase method is accounting for amalgamation, same principle. So any company going to purchase assets, the same manner purchase method has to be applied. Okay, vendor company means selling company, purchase company means buying company. Vendor company sold, buying company purchased. Okay, right. So purchase method has to be applied. Just like a purchase of assets, no. Same manner the purchase method has to be applied. Right. So the choice of accounting method depends on the fact whether B Limited wants to continue the business or not. That's it. See, when the B Limited wants to continue his business or not, it's up to them to decide. Okay, right. So for accounting method, there are two cases of accounting method available. One accounting method, pooling of interest method or purchase method. Any one of the method only they have to accept. Whether the business is going to continue or not, the resulting company will have to decide. Okay, right. So whether the B Limited is going to be continue or not. Any B Limited acquired by A Limited. Whether B Limited will operate in the own name or not, they will decide, or A Limited will decide. That's it. That we cannot predict it. Suppose there are two types of accounting: pooling of interest and purchase method. There are two types of merger: amalgamation nature merger, amalgamation of purchase. That's it. Let's see one model 216 paper. Answer the following. Anjana is observed by Sanjana Limited. Sanjana Limited. So this company going to be taken over by Sanjana Limited. The consideration being all the liability to be taken over. The payment cost of consideration is not exceeding 10,000 rupees. Actual cost 9,000. Any maximum 10,000 is a cost of payment consideration. Payment of cost observation 10,000 rupees. The payment of 9% debenture of 50,000 or premium of 20%. Anyway, this company has to settle debenture holders. This company has to settle debenture holders. So 9% debenture holders to be settled. Debenture holders to be settled at 50,000 plus 20% premium. 20% premium. That's called 60,000. So 50,000 plus 20% premium, 60,000. Anyway, debenture holders has to be settled. Liability has to be settled. They take the liability, no. Anjana Limited absorbed by Sanjana Limited. Anjana Limited is absorbed by a selling company, vendor. Selling company. Anjana Limited is called selling company. Vendor company means selling company. Vendor, selling company. It is absorbed by Sanjana Limited, buying company. That's it. Okay. Anyway, so maximum payment for cost of observation 10,000 rupees. 9% debenture 50,000 plus premium 20% to be observed. Then in 8% issued at a premium of 20% face value. Okay. But automatically cost of observation not exceed 10,000. The payment of 9% debenture 50,000 per premium of 20%. In 8% debenture issued at a premium of 20% face value. Okay. So then how the payment has to be done? Payment in 8% debenture issued at a premium of 8% debenture issued. Instead of old debenture, new debenture to be issued. Okay, right. 8% debenture issued at a premium of 20% face value. So premium of 20% face value to be given, and rupees super model 15 per share in cash we have to give, per share cash to be given, and 11% preference shares to be given, a 10% discount, and 4 equity shares, 10 each at a premium of 20% paid for every 5 shares in Anjana Limited. That's it. That's what they're going to say. Anjana Limited company equity shareholders to be paid. Anjana Limited company's preference shareholders to be paid. Anjana Limited's debenture holders to be paid. Anjana Limited shareholders to be paid cash also. Automatically 4 days of payment. For purchase consideration, debenture issue will not be taken into account. Purchase debenture issue will not be taken. Who is selling now? Anjana Limited. For Anjana Limited, we have to pay some cash. Who is going to pay? Sanjana. So Sanjana is going to pay some cash to Anjana. Sanjana is going to pay some 11% preference shares at discount to Anjana. Sanjana Limited is going to pay or issue some equity shares, premium of 20%. For purchase consideration, debenture will not be taken into account. So Sanjana, the buying company, will pay some cash, will issue some equity shares, will issue some preference shares for purchase consideration. That's it. How to calculate? There are 4. Actually, anyway, debenture also to be settled, but it is not a part of purchase consideration. Debentures of Anjana also going to be settled, but it is not a part of consideration, payment consideration, purchase consideration. So for cash, preference shares, equity share to be issued, right? How is it going to be issued? And 4 equity shares paid for every 5 equity shares of 5 shares of Anjana. Every 5 shares of Anjana, so 4 shares of Sanjana to be given. That's a clue. So Anjana, Sanjana is a vendor company, selling company. Sanjana is a buying company. For every 5 equity shares, 4 equity shares of Sanjana to be given. Similarly, 5 preference shares of Anjana, 4 preference shares of Sanjana to be given. That's what they're telling you. For every 5 shares, 3 preference shares, 3 preference shares. For every 5 shares of Anjana, 4 equity to be given. Every 5 shares of preference shares of Anjana, 3 preference shares to be given. That's a clue. That's a clue. Every 5 shares of Anjana, 4 equity shares to be given. Every 5 shares of Anjana, 3 preference shares to be given. That's a clue. Let's see how to proceed. Purchase consideration is question mark. Very simple. So for 1.5 lakh shareholders available for Anjana. For Anjana, 1.5 lakh shareholders available. Shareholders are available for Anjana. For Anjana, 1.5 lakh shares available for Anjana. Right. How to pay purchase consideration? How to pay purchase consideration? Okay. So purchase consideration for Anjana stakeholders. Okay. Or shareholders. Okay. Anyway, first we have to pay cash. We have to pay cash. How much cash? Per share of Anjana, 15 we have to pay. Per share of Anjana, 15 we have to pay. Anyway, 1.5 lakhs into 15. So 20 lakh 50,000 we have to pay. So 1.5 lakhs, 1.5 lakh shareholders of Anjana into 15. That is equal to 20 lakh 50,000 we have to pay to Anjana shareholders by Sanjana. Next. Every 5 shares of Anjana, 4 equity shares to be given. 4 equity shares to be given. Okay, right. Next one. So for every 5, we have to pay 4. Every 5 equity shares, we have to pay 4 equity shares. 4 equity shares. Now, for 1.5 equity shares of Anjana, how many equity shares we have to pay? That's it. That's a question. So 1.5 lakhs by 5 into 4. That is equal to 30,000 into 4. That is equal to 1,20,000. 1,20,000. Okay. So 1,20,000 shares into 12 to be given. That is equal to 14,40,000. 14,40,000. Right. So 14,40,000. That's yes. So 1,20,000. Please check it out. It is going to be 30,000 into 4 1,20,000 shares into 12. Well, that is equal to 14,40,000 equity shares to be issued. 30,000 equity shares to be issued. Okay. Please check it out. Okay. Sir, 1,20,000 equity shares to be issued. For 1.5 lakh shareholders, 1,20,000 equity shares to be issued. Similarly, preference shares. Similarly, for preference shares. Okay, preference shares. Same logic for Anjana. Okay. So 5 preference shares of Sanjana, 3 preference shares to be issued. Okay. Now 1.5 lakhs for 1.5 lakh shares. 1 lakh shares. How many to be given? Okay. Preference shareholders also 1.5 lakhs. 1.5 lakhs. So 1.5 lakhs shareholders available. Okay, right. By 5 into 3. Well, that's equal to 30,000 into 3, 90,000 into 9, 8,10,000. 8,10,000. Please check it out. 8,10,000. Okay. Anyway, cash to be given, equity shares to be given, preference shares to be given. Please make a total 45 lakhs. So this is the amount to be paid to Anjana shareholders by Sanjana company. Cash, equity shares, preference shares. Any amount paid to debenture holders will not be included in the calculation of purchase. I told you already, amount paid will not be part of purchase consideration. Therefore, anyway, instead of 9% debenture, premium of 50,000 plus 20%, in 8% debenture issued at premium 20% face value. Okay. So payment consideration, the payment of 9% debentures of 50,000, the premium 20% in 8% debenture to be issued. 8% debenture to be issued. So instead of 9% debenture holders, we are going to issue 8% debenture at a premium of 25% face value. Earlier, 20% premium that is going to be taken away. 8% to be issued at 20%. That's it. Okay, fine. Please check it out. Completed. Okay. Any purchase consideration is going to be 45 lakhs. 45 lakhs. That's it. Let's see 2018 paper. 1st April 18, Tina Limited takes over the business of Reena Limited. So accusation. So takes over the business of Reena Limited. And purchase consideration as follows. So Tina Limited anyway going to make a payment of to Reena Limited. What rate they are going to give? Issued 50,000 fully paid equity shares of 10 each at a premium of rupees 5 per share to the equity shareholders of Reena Limited. 50,000 fully paid equity shares of rupees 10 each at a premium of 5 per share to the equity shareholders of Reena Limited. That's the first part. Okay. First part, that's a purchase consideration. 50,000 fully paid equity shares of 10 each at a premium of 5 per share to equity shareholders of Reena Limited. First part, payment consideration. So 50,000 equity shares of 10 each at a premium of 5 per share. So 50,000 into payment. 50,000 into 10 plus 5, 15 rupees. 10 rupees shares issued premium 5 rupees, 15. So 50,000 to 15, 7.5 lakhs. Equity share to be issued, 7.5 lakhs. Right. First part completed. Second one. Cash payment of 50,000 was made to equity shareholders of Reena Limited. So cash payment of 50,000 was made to equity shareholders of Reena Limited. 50,000 made. So 50,000 cash payment given to Reena Limited. 50,000 cash payment given to Reena Limited. Right. Number 3. Issued 2,000 fully paid 12% preference shares of 100 each at par to discharge the preference shareholders of Reena Limited. About 2,000, 12% preference shares of 100 each issued at par to discharge preference shareholder of Reena Limited. Now preference shareholder will be given at par. But 2,100 we have to pay. 2,100. So 2,100 we have to pay. So 2 lakhs. 2,000 shares into 100 each to be paid to the Reena Limited shareholders. That's it. Anyway, this is part of purchase consideration. Cash payment part of purchase consideration. Preference shares part of purchase consideration. But debentures of Reena Limited to be settled in equal number by different debenture Reena Limited going to issue. Okay. So issue the old debenture to be taken away, new debenture to be issued. Okay. Reena Limited says to Reena Limited shareholder debenture holder, sir, old debenture will take away. New debenture will issue. Anyway, debenture settlement, not a purchase consideration. It is not a purchase consideration. Please check it out. It is not a purchase consideration. It's not a purchase consideration. So okay. Anyway, it is not a purchase consideration. Okay, fine. So payment of debenture holders are not covered by purchase consideration. By purchase consideration. Anyway, 10 lakhs settled to Reena Limited. Equity shares 7.5 lakhs. Cash payment 50,000. Preference shares 2 lakhs. So totally 10 lakhs. So journal entries in the books of Reena Limited. Okay. So anyway, 10 lakhs you have to settle. So liquidations of Reena Limited account debtor 10 lakhs. Liquidations of Reena Limited account debtor 10 lakhs. 2. Equity share capital 5 lakh into 50,000 into 10. 2. Security premium 50,000 into 5. 2. Cash rupees 50,000. So preference share capital 2,000 into 100. That's it. This is a purchase consideration. 50,000 into 50,000. This is nothing but 50,000 into 10 plus 5. So 50,000 to 10 is share capital. 5 rupees security premium. That's it. 50,000 to 5, 10, 5 lakhs. 50,000 5, 2.5 lakhs. 50,000 cash. Preference capital 2 lakhs. That's it. So being discharge of purchase consideration. That's it. So anyway, Reena Limited will hand out the liquidators of Reena Limited 10 lakhs. How the settlement is supposed to be? Equity share capital 5 lakhs. Security premium 2.5 lakhs. To cash 50,000. 12% preference share capital of 2 lakhs. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.